Good morning. It's Tuesday, November 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we're seeing some momentum-based selling with a sea of red on the screen overnight. U.S. futures are sliding, with Palantir's strong beat and rise failing to spur any kind of follow-through buying. That stock is down over 6% in the pre-market. This comes combined with a pullback in the crypto market, some hawkish Fed speakers, and unwind of pockets of the hyper-momentum trade is really weighing in. The S&P 500 futures down about 1% at 6812. That's down about 70 points. The NASDAQ down about 1.3%. Sitting at 25,770. You even have the Russell down about 1% as well. The dollar index here pushing up, matching the highest level since early August. So you look back at Palantir, they raised their annual revenue outlook to $4.4 billion, and it's outpacing the analyst estimates for the third quarter sales, but the shares decline here. Really a lot of concerns about the company's lofty valuation after the record run-up. You look at the precious metals markets, just a sea of red across the board here. Everything from gold to platinum to palladium to aluminum, all lower on the session. And if you look at the gold market, yesterday it gained about $18 here, but it's really settling back right around this $4,000 mark. Call that really your pivot here. It's been up 3 out of the last 4 trading sessions. It's about 7.75% off the 52-week high. That was seen on Monday, October 20th at $4,336, and it's up 55% since its 52-week low, seen just right around the election here on November 15th, where gold was at $2,565. Now you shift over to the silver market, because it's down about 1.2%, sitting at 47.48. It's down about 57 cents, and it's having its largest 2-day dollar and percentage decline since October 28th. It is off about 9.6% from its 52-week high at $53.02. That was seen on Thursday, October 16th, and what was happening around then is that you had China was shut off for their holiday. You had the London market here seeing some physical squeeze here with the demand from the ETFs, and then also India running out of supplies here, trying to buy from London, and it was almost a perfect storm that got it back up there. Now, I believe that the days of silver getting back up over 50 are not behind us yet. We should continue to see some upward price momentum as the dip buyers come in. Now, copper futures, that's the biggest decliner here in the overnight session, down about 2.65% here. And it's down for about 3 consecutive sessions here, and it's about 18 cents is the sell-off here. It's had its largest 3-day dollar and percentage decline since Friday, October 10th. It is off about 12% from its 52-week high and up 26% from its 52-week low. So really the concerns are about China's economic slowdown impacting copper prices here. Then you also have some uncertainty of the prospects of that next interest rate cut out of the Fed here. And then also Codelco, they had eased some of the concerns about supplies. On Monday, the miner said that it is expected to the output this year and next year is expected to be higher than what we've seen in 2024. So that's helping ease some of the tensions around those global supplies. Now you look at kind of the market trends and the FX here. The dollar index up 8 here at 99.79, and that's really bullish against the euro, the yen, the pound, the Canadian dollar, and that weighs in, and that is about 90% of the inverse basket here against the dollar. Now we are having treasury yields just ease back just a bit here, with the 10-year treasury yield declining about 2.5 basis points here to 4.08. Currently, I believe that taking advantage of the higher yields is your best trading opportunity out there, because bond volatility has also collapsed to its lowest level since April. So you look at the November VIX futures, and this is where it becomes problematic in the U.S. equity markets, and people are really going to start to lose their cool and emotions play in. You want to look at the VIX, because the VIX has poked back over that 20 level, and 20 seems to be the level where people just really lose it, and you see these wild swings take place here, not only in the tech, but in many different markets, and it spurs over into the global markets as well. Whereas gold volatility is continuing to come down, and that's where gold seems to like to be anchored here at that 4,000 mark. So you got gold volatility at 21.38. It's continuing to decline. It's slightly over that 20 level, but really should continue to keep pushing lower. Your key support in gold is going to be 39.17. The resistance is going to be about 4,100. You look at the silver market, it's 45.75 is your support, and your resistance is 49.79. So we look at some other things here with the global markets, the earnings, and also the Fed and interest rates. You look at the global markets in Europe and Asia, you got European stocks. They fell on concerns about the Fed's next move, also that Palantir, those earnings, reviving some of the concerns about the tech valuations. And then you see mining shares are among the biggest laggards here after copper had dropped. You go over the Asian tradings here, you had South Korea leading the retreat. Traders really sold a lot of their high-tech here shares here. The MSCI Asia Pacific Index dropped about 1%. It was its biggest one-day decline here since October 17th. You had Samsung and also TSMC, really the biggest draggers. And then the key gauges here around the globe, Australia, China, and also Taiwan, they as well sold off. So out of the 336 S&P 500 companies that have reported so far this earnings, 82% have beat the analyst forecasts and 14 here have missed. So what is the market thinking with the Fed and the concerns about interest rates? Well, you do have Michelle Bowman. She is speaking right now. She is a Fed official. And you got a series of remarks from Fed officials offering kind of some contrasting views here for what's next in U.S. interest rates. It was Chairman Jerome Powell. He warned that a December rate cut wasn't a foregone conclusion. And then you also had Chicago Fed President Austin Goolsbee saying he's more concerned about inflation than the weakening labor market here. So right now, the CME's Fed Watch tool has about a 71.9% chance that the Fed will cut 25 basis points. This has risen from yesterday here. At that next meeting, which is going to be on December 9th and 10th, it's down from 90.5% last week. And remember, the big decline on the expectations took place, especially during Jerome Powell and his press conference. So you want to bookmark the CME's Fed Watch tool if you ever want to check in on a day-to-day basis what the expectations are for those interest rate cuts. Now you look at the ETF flows here. Well, they started to add a little bit of gold with the total gold held by ETFs. It's up about 17% this year, sitting at about 97.3 million ounces, and gold is up about 50% year to date. So you look at the silver market here. Well, they cut about 379,000 ounces of silver, but it is still up about 14% year to date. If you guys got any questions on futures option trading, you love to open up a trading account with us. Many companies out there, many customers, they come through us through this channel, the video here. And what we do is we sign them up for some of our research, get you set up on a trade platform. Really easy to fund the account. We can get an account set up here same day here and get you up and rolling the next day. If you have any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.